Cool. Just to let everyone know, this session is recorded. So if people need to be anywhere, need to go, can't watch all of it, you can always rewatch it. It will be uploaded straight after on YouTube. And we're gonna do these webinars every Monday at 1 p.m. and we're gonna go through all the pairs. Every Monday at 1 p.m. And during the week I will do an update session. All right, so this is the dollar index. As we have seen, we have been very bullish. I'm going to explain the indexes so I can explain the direction of the currency, and then I'm going to go on to do the actual currency pairs, and there will be normal currency. There will be normal currency. I mean, there will just be normal analysis, but from the what do you call it? From the indexes, you can you'll be able to get a bias for the overall pair. If you get what I mean. Yeah. So the dollar index is very clear. We have very clear analysis. We have very clear trend. Sorry, our trend is up. We're bullish, and this is on the weekly time frame, so we can say that we're as in we can more or less say we're guaranteed. Trend is bullish. Know what's going to happen now, but what the overall trend is bullish. We had obviously price is not going to go up straight away. Price moves up, creates a higher low, creates a higher low, goes on to make a higher high, comes back in, and then goes again, makes a higher high. Right now we're bullish, and if we go into the a bit lower time frame, we can see that we're in a very bullish market structure that hasn't been broken yet. Price has bounced off this area and has not taken out this area. Price keeps bouncing off areas that it's breaking and retesting. Price is not breaking market structure to the downside, but price market structure is staying intact, bullish. So for now, we can't say anything. We can't trade anything but a bullish, trade. I initially drew this trend line like this. We got our retest and we got our continuation up, and then we got a retest back again. Right now we want to see a continuation up from here, making lower. I mean, as in making market structure, making higher highs, and then coming in to make a higher low, and then going up higher to make a higher high, and then eventually breaking this. And once it breaks this, it probably will achieve liquidity, and then you start looking at your take profit prices for for the pairs that you're trading. That's the channel. Cool. All right, cool. Let's do USDJPY. USDJPY. Last week we had a very quiet week because it was holidays. This is USDJPY, and this is drawn on the weekly time frame, I believe. Yeah. Yeah. Oh, cool. If you see this graph, the DXY, you see that there's a lot of correlation between the two pairs. The correlation isn't an instant correlation. The correlation doesn't mean if one goes up, the other's going up right now. It just means that the overall trend for both pairs are the same. The overall trend for USD JPY or the overall trend for the dollar index is the same. And this just gives you an extra confirmation. And more things that you find that are the same. If you're on a weekly time frame for USDJPY and you want to take a buy and you go into the daily, you see buy and it'll be 4 hour, 1 hour, and every single time frame is suggesting to you that you could buy, then that's a higher probability trade. The more so in trading terms, you wanna find the most probable thing to happen, because you never know what's going to happen, but you can find out the most probable thing that would happen. So that could happen to you. No, so that could happen to the pair. And then you go with the most probable, even if it's not right, because if it's the most probable, then it will be the one that's the most right over 100 times, not in the short term. All right, so for USD JPY, we go into the daily time frame. Market structure is bullish. Um, we tapped in. We even retested Friday. We should go up. Liquidity is lying here. So you would aim for something. If we were to retrace, would retrace from here. I don't think we'll retrace like this, but this is our initial move that we want to grab. Well, all of these pairs will be sent in the group as well, so you can have an understanding so you can have a visual illustration of what we were talking about. Probably something like this. And then really truly, take out this high. That's USD JPY. Sorry about that. Gold. Gold. We had a beautiful gold swing trade from here. We achieved more than 1,000. More than 1,000. Yeah, more than 1,000. We got more than 1,000 pips for those who could hold, and for those who could not hold, that was your own loss. Okay, cool. On the weekly time frame, gold has been very bearish, but in recent weeks has shown bullish price action. But the bullish price action is very weak and not bullish price action enough to tell us that the structure is changing from bearish to bullish. And last month we had a retest of this zone here. However, liquidity is lying below here, below here, below here. So really and truly, liquidity is sitting here. And if liquidity is sitting there, then banks are gonna hunt liquidity. Yeah, but banks are gonna hunt liquidity and they're gonna push price towards liquidity. Let's go into the lower time frame. In the lower, in the lower, just remember it. In the lower time frame, we see there's a lot of liquidity higher, but in the higher time frame, we see that there's a lot of liquidity lower, and the higher time frame is more important than the lower time frame, which means that we could get a possible scenario where price will move into this bar and grab the liquidity of here, of this, of these, grab this liquidity, and then stabilize in a box, and then come and grab the higher time frame liquidity. Or price could just go for the liquidity. I don't think they'll do that though because there's a lot of liquidity in the lower time frame that's higher. I honestly don't know what liquidity. Liquidity is it's like an area where banks are pursuing. So it's like an area where price like price moves to go there. Liquidity is in simple terms where normal retail traders are getting stopped out. So if you think about this, why I'm saying this is liquidity on the lower time frame is because if you're selling here, your stop loss is here. So your stop loss is liquidity. They're coming to grab your stop loss, which is they're coming to get liquidity. I say liquidity and not someone else's stop loss because that's a more professional word to use. But say they're gonna come grab your stop loss and then it's gonna make the real move, and it's gonna and so that's basically hitting liquidity and then moving down, and then there's liquidity here down here as well because all the people that were buying up here will have their stop losses below here, below this point. So all their where their stop loss is lying, where the most stop loss is lying most of the time, that's where liquidity is. That's where liquidity is. Yeah, so that's the two possible scenarios for gold. Um NZDUSD. This is the last week of the month. Last week. Um what we were saying about liquidity is if you can see here that was the liquidity that price took with a closed bullish candle. In this bullish candle is where I would say banks were selling throughout the candle, but it closed bullish for manipulation for detail traders. But banks were selling throughout this whole candle, in my opinion, because of this. And now, because banks were selling throughout this whole candle, once the price comes up and starts triggering the rest of their orders this week, we should carry on falling down. And I think this will be an interesting point for NZD which is probably from entry about 200 pips. We will probably won't even get that in a week, but um, that price level is interesting. I would probably look to take profits there, but this is a good trade setup for this week. Let's clear that. Yeah, I like this. So this is my trade idea for this. Chilling. Cool. We're not trading Mondays, but this is a trade that we'll be looking to probably take tomorrow morning. This is our AUD USD trade as well. We're currently 43 pips up. Some have already closed. I don't know why. That's your choice again. You can do what you want. If you want to close, you can close. If you want to don't close, don't close. But if you want to listen to my opinion, in the long term, you're gonna end up right. You're gonna end up better off. But if you don't want to, that's your opinion. No one can stop you. We have been bouncing off quite a lot, which makes this area stronger. Price wasn't too wiki, so it shows us that there's not too much liquidity lying there. However, if we go into the daily time frame, you can see that market structure was bearish. We had a pullback and then continuation down, and now what we look like we have is a liquidity grab, so that we can continue down for the rest of the day and expect today to close bearish. If we do close bearish, then I will look to take new entries during the week for another sell. Euro pairs, euro. All right, cool. Let's start off. So let's start off. With the market structure. Where's market structure? Bearish. Market structure is bearish. However, all right. Okay, so we have on a weekly time frame we have a squeeze, and let's draw this trend line. Just to see Euro CAD. Yeah, we have a squeeze, which could mean which means that price is gonna explode in a certain direction, but knowing that is not enough because it doesn't tell us which direction that we're gonna explode. If you can see, we have liquidity on both sides. We have a lot more liquidity to the downside. We have a lot of liquidity lying here. So, in my opinion, prices wants to come down into liquidity, touch that trend line again, and then that would be a beautiful buying opportunity. You could argue that the weekly time frame is showing bullish price action, not anything else but bullish price action, because price has been bearish, bullish, but not as strong as the bearish, and another strong bearish. And then you can see we're starting to get stronger and stronger weeks with bearish price action. These are important because this is telling us that this is months now. A month is closing bullish. However, last week we dropped. Oh, last week, you see, last week they made us. So last week the high of the month was in last week, and the week before that the low of the month was in. If we say yeah, that's if we say that market structure is bearish, um price is bullish, bearish, bullish, bearish, bullish, and then bullish but bearish, and liquidity grab above resistance, which stopped out people that were selling, all that had sells at very good positions here, stop them all out, and then we're gonna get a continuation down into our weekly order block with trend line touch and liquidity target. Then I think we could. I think it's safer to say that we are in a bearish market than a bullish market. And as you said, as I said before, it's all probability. You can't say one market you can't say a short one is one market and a short is not one market. So it's which market has more probabilities, and then you work with your probabilities and entry requirements to enter trades and see what's compatible for you. That's how you get better with trading. Right. Okay, so um, this is the area that price broke out of. We tested now, and with price, you would usually expect price to continue up, but because of what we know from the higher time frame or what the higher time frame is telling us, we can understand why price may not do this. We must understand that price may continue down into here on the daily time frame, and probably will close today even bearish. And if today closes bearish, you get at least 45 pips, which is not too much, but it's not too bad. Oh, we're gonna see a rejection from this, just like this. A touch and rejection of that candle, that 4 hour candle will be my confirmation candle to take this trade. I would enter there with a stop loss. Say I was to enter at the beginning of there. Enter with a stop loss, 40 pips, and I would take a profit of the minimum 300 pips, which is the touch of the box, which is you usually get price usually goes 50% into an order block before retracement. Usually. Um, next pair, euro pound. Euro pound was consolidating. Go up, came back, go back down again. We had a massive bullish. I want to do this. If you can see this, Price hasn't really broken the structure on the higher time frame, to be honest. And price could still be bullish because we cannot consider this current candle until this current candle closes. So price could continue being bullish if price closes if this month's candle closes bullish, then we can have a continuation up with liquidity above here. Liquidity is above here, so your first target profits. Your first profit targets would be here. Let's go into the notation. So if we're saying we could be bullish because market structure hasn't been broken, we have to look for entries. Sorry. Yes, we have to look for entries. If price is now very bullish, we have to see where we could enter or where banks were placing orders and where price may come back to again before going. To be honest, price could be traced. In fact, all the way down to here because that's where the break happened, and because the bullish move was so significant, the bullish move was so strong and aggressive, and it happened all in one. It happened in one day. You see, this hasn't broken market structure yet. This hasn't taken that out. It's following market structure. On the lower time frame, euro pound is bearish. On the higher time frame, euro pound is bullish. So we'll leave it right now. It's not a trade that it's not a clear trade. It's not clear enough to trade. So there's no point in really trading it. That was a very nice retest. Retested all the way up. Broken zone. And drop that down. A lot of empty space. Yeah. A lot of empty space. Yeah. Now, expecting that to get filled. But wait for this. We're gonna wait for this to get filled. And then we wanna fill the bigger move. This is swing trading, so you want to get all of the biggest moves. Yeah. So that's euro pound. I can't. To be honest, yeah, euro pound's a bit of an unclear one right now. So we won't be trading it unless it does give us anything here this week during the week. Euro NZD. I actually quite like this setup. Well, I actually quite like this analysis because it's understandable. If you go into the weekly time frame, we were very bearish recently, but we've hit a trend line. On the bullish. See, that was a break of the channel, retest of the channel, and then continuation up. And then when we fell through that again, we say that this was all a fake out. On the higher time frame, it did last quite long, but a fake out. Ooh. Yeah, so that's irrelevant. Now the market could do two things. We could go, because we've been very bearish. Because we've been very bearish recently, we can see price. we can see price retrace and then continue going lower. Or um, this is a this is something I want to show you with trend lines. If you move your trend line up and on the weekly time frame that respects that's the correct trend line. Last week we closed just below it, and so we can expect a continuation down. But because the market has been so bearish recently, I thought I went onto the daily time frame, and this is probably the smarter way of drawing this trend line because as I'm putting everything into consideration, that's probably the smartest way of drawing. For now, really, there's no really trades. There's no swing opportunities. Um, on this pair, we might be looking for the bullish move, but because as I said, we don't know if it's going to be the full move. For these kind of moves, you'd have to enter, move your stop loss to break even, and see if the move plays out or doesn't play out. And that's just gonna how it's gonna. That's just how it's gonna be for this one. Yeah, so this one's quite simple, actually. Yeah. Euro 80. Euro AUD. AUD down. Euros up. Let's see. Okay. This is Euro AD, which goes with Euro AD. All right, so monthly time frame, we made a higher high, we stabilized, we took liquidity of this area here, we took the liquidity, we stabilized, we closed candles, now we're bearish, my opinion. A lot of people have traded and they did trade this move once they realized that we stabilized here. The next month, price went back up and retested it again, tricking people, making them think that price um, is gonna start going bullish um, the bullish monthly candle. But as I said before, if you shouldn't be taking these into account because they're not closed yet. You can't trade with you can't trade you can't you can't you can trade you shouldn't do analysis based on candles that haven't closed because they just manipulate you because the whole point of the algorithm that's creating these candles is to trick you whilst you're watching it. If you're not watching it and you see how it closes, it can't trick you. Well, it can trick you as well, but it can't trick you as much because it has to close at a certain price and it has to open at a certain price, and that price is calculated before it even started creating the candle. So you watching the algorithm trick you is literally exactly what they want you to do. They literally want you to sit there and watch the candle form. That's when you fuck up. You don't watch the candle form. You do your analysis. You place your trades if you have trades. You place your buy limits if you have buy limits. You place your alerts on your phone for price levels to check the market. You do that, but never just sit there, stare at it, watch it go up, down, go into the 1 minute time frame, just watch it hot. That's all wrong. Um, realistically, I want this month's candle to take out this low. I don't know if that's going to happen because we only have this week left. But that would give me a nice confirmation to sell for next month. If we go into the weekly time frame, we did take out the low, not properly. We're still in a higher low. We haven't really broken the higher low structure. The price could go bullish again. Yeah. Yeah. And these order blocks could be very precise if you get them. You can probably get you could get the position up to 1 or 2 pips if you're day trading the markets. Last euro pair, Euro JPY. All right, one thing I wanted to explain about Euro JPY for our telephone. I and some students from my students, the people you know you are, of course. We have we had buys on Euro JPY from here. From here. So we had buys from there, and once you like, well, if that was an order block for me. But one thing I want to make clear is you don't know if it's going to be the right order block for price to react off. You get what I mean? You don't know that, as in you can't say that it will be or it won't be. If you get what, as in, if you get what I mean, like you just you have to place your trade, make it risk free, and see what happens to your trade. Where is it? Let me use the bullish order block that I used. For me, it made sense for price to retrace and continue up from here. I used this order block. What? Let me choose something on the photo. Yeah. So when price moved bullish all the way up, I'm not taking. You have to realize you're not taking profit here, or you're not taking profit all the way up. If your target, my target was up here, which was to take these out, which is up here. That's my full target. If you get 100 pips, you can take half profit because that reassures that you put something into your account. But yeah. Okay, cool. Let me explain something to you right now. This consolidation period means 50-50. It means that the banks the banks that are trading on the interbank system, which is completely different to our system, but it's replicated, so our system is given results from their system. So our system has nothing to do with us trading. Our system is a copy of the interbank trading, and then they feed it through an algorithm that prints our graphs. Our graphs have nothing to do with us buying and selling. We have no input into the market. We have nothing. So this 50-50 split of the banks buying and selling causes a consolidation. The consolidation, as I can show you here, we're bullish. Can you explain it? Yeah. I'll explain it to you, Jinder. On what you call it. I'll telegram you after the session. All right. Okay, this consolidation period. Let me explain something about this consolidation period. Here we have a bullish area, correct? But this bullish area is not strong. It's not like forcefully bullish. You're right or wrong. Candles are not filling properly. Candles are filling each other. Candles are going up slowly. There's even a red candle. There's even a bearish candle to retest there. So it's not very strict bullish price action. Here we had we had a consolidation period, and then we had this very bearish candle, and then we had again bullish price action, which was good, very good bullish price action, and then we had a consolidation period which killed it, which meant that price is not going to go higher. Let's see. And then we had a consolidation resistance, price dropped with good bearish candles. And then again, price came up again slowly but surely, which shows that price has no strength bullish. And then consolidated again, and then went down again. So this is telling me that price till this point here, bullish. Now we had very bullish price action in the last day. Excuse me, sorry. Yeah, in the last day we had bullish price action. This is our resistance. If price is this bullish, what do you think is gonna happen? Price is gonna break it. So you're either gonna get two scenarios. You're gonna get something where price is gonna close like this, exactly how it is. So you're gonna say price is gonna close with that bearish candle, and then the next one's gonna be bullish because that's gonna count as the retest, probably on the lower time frame. Or we're gonna this candle right now is going to continue up and we're going to close bullish. If this closes bullish, the next candle will probably just retest a little bit and then it will just continue going up straight away. You get what I mean? Cool. What I wanted to explain here, most importantly, was like consolidation periods and how to understand when they're going to be broken, when they're not going to be broken. If you and understand how they're going to be broken, are they going to be broken higher or lower or whatever. So right now you can see that uh, price price uh, price here is stable. No long wicks. No um not like this. Like here, look, you can see that wicks. These wicks want to be grabbed. But here, we're having more full candles, even though we do have wicks here. But here, as in, we only have it here. But as you can see on the top, we have it a lot more. And this is something that you just see with your eyes. Like I could just see it with my eye, and I'm explaining it to you so you can understand it, so you can start seeing it with your own eyes. And the only time you're gonna start seeing it with your own eyes is if you if you train your eyes to see it. Really and truly, that's all it is. Train your eyes to see it, and you will see it. So that's Euro JPY. Euro JPY, my bias is bullish, but look at this daily day zone. Price until price breaks, we can't say 100% where it's going. But once it does break, we will have a trade opportunity that will be clear and will be waiting for us. All right, let's do pound pairs now. Pound. Okay, pound JPY. We even here the concept of liquidity works again. You can see there was liquidity here. Price took it out. As soon as it took it out, closed the bearish candle, bullish candle. Probably this bullish candle had sell orders, and then we had a continuation down, as I was explaining with Euro AD, I think. Price, and then look, there was, these were the wicks, and then they got hunted. As soon as they got hunted, I started to move back up. All right, so now on the weekly time frame, we're bearish. We're bearish, but we have to see where we're gonna get in. Where we're gonna get in our sells. The daily time frame. I'm gonna be looking for bullish for entry. Sorry, for entry around here. This is a nice. Yeah, so we're not too far. Yeah, 120 pips. To be honest, pound pairs, they can do that in a day. Oh, this is one more. Great British Pound. Yeah, we haven't really broken market structure to the bearish just yet, but we're still kind of bullish. But because most recent price action was very bearish, we could say we're bearish. Uh, if the very recent price action is bearish and the overall price action is bullish, it does give you a good opportunity if you want to go long, because yeah, you'll be risking very little to go long, but because you're saying that price has been very bearish, if you get what I mean. So if we're saying that price, this is, cool. If we are bullish, I would want this trend line to break, as simple as that. I don't want to bounce off this trend line, so I want it to break out this trend line. Come back for a retest. Come back for a revisit. That's what I want. My entry would be there. Okay. Great British Pound USD. Obviously, probably most of you have closed it, but to be honest, I'm out as well. I closed at 500 pips. I closed all my positions at 500 pips. That was a nice trade though. Very clean trade. As you can see, price has been bullish. Didn't take over. Big change market structure. I mean bearish. Sorry, price has been bearish and then bullish, but not enough bullish to take over price market structure to turn bearish. I mean to turn bullish properly. So continue bearish, and now price has been bearish. It should be bearish because the overall is bearish. No, GU should be bearish because uh, everything on the higher time frame is bearish. And the liquidity is obviously below the lows. They're probably gonna come to grab liquidity, and then we're gonna make our move higher. And that's actually bearish. A trend line that a trend line that I put there cannot change my bias. And it will not change my bias. Yeah, that's Great British Pound USD. Expecting further bearish movements. I don't know about the pound, but I'm bullish on Great British Pound NZD. I think I saw. Even that's a nice trend line. Let's do this after. Right. Yeah, even up. That's the two scenarios, but I think that price is gonna go bullish now to retest, and because price has been so bearish, uh, we need some sort of corrective price action, if you'd call it that. We've done all our pairs, so we've gone through 17 pairs. All 17. Yo, someone wants to draw a trend line here. This trend line. Yeah. If you drew this trend line, it would be the same as the other one. Great British Pound, Great British Pound. No, Euro. It would be the same as Euro. Where we'd say a price may come down now, but because uh because price came into order block for Great British Pound SZD, I'm expecting it to go up a little bit more to retrace. Even Euro AD, I'm expecting it to go up before we get any other movements properly. We want a slow retracement back up into the area, to the correct areas. All right, so all 17 pairs will be sent. Screenshots of the pairs will be sent to the group, and during the week we're gonna assess every single pair, and we're gonna trade every pair. No, we're not gonna trade every pair. We're gonna trade every pair that gives us the correct setups. So yeah, I'm sorry we haven't done webinars for so long, but life has just been a problem for very long. But we're all good now. I'm good. Everything back to normal, and we're gonna have sessions every Monday at 1 p.m. to 2 p.m. Every Monday, 1 p.m. to 2 p.m. Yeah, that's it. Any questions? Let me know. There's one little section of 8 sections for the course to be completed. Once that's completed, all normal course students will get that, and anyone that wants to become a student can become a student. Then you can actually become a student. And then once this course is also done, then it's fully focused. We will be fully focusing on trading. Thank you, guys. Thank you for watching. And if you want to rewatch any parts or anything, it's all going to be on YouTube. It will be uploaded in about 20-30 minutes. Thank you. Have a good day, everyone.